Welcome back to the Inner Circle Show. In today's episode, we will discuss and recap the Tesla Q2 earnings that happened yesterday. But before we get into all of that, don't forget to like this video, subscribe to the channel, and turn your notifications on so you do not miss an upload Monday through Friday. So let's just get the top line level stuff out the way first. They beat revenue estimations, but they came in short on the EPS estimates. So I guess you could say that this was a mixed result, but let's dive in further. They added $3.9 billion to their cash and investments in Q2, bringing their total amount up to $30.7 billion. This is a 33% growth year over year, and this is the highest recorded level that they've ever had of cash and investments. And this is good for a variety of reasons. Of course, it reduces their financial risk, which is especially important during economic downfalls. It also means that they can remain very flexible. They are able to act on new projects, to act on new expansions, to be at the forefront of innovation. Now, they could, of course, with this extra cash, do a share buyback, which a lot of people really like. Or maybe they could start paying dividends, which I think is very, very, very unlikely at this stage. But also, Elon did mention that maybe they could invest $5 billion into xAI. xAI is of course a relatively new company, and it was created separately to Tesla in order to incentivize the right engineers wanting to work on AGI. Now, I think this investment actually makes a lot of sense. I think that it will be very, very bullish, and it would be fantastic if as a result of this, if this does go ahead, obviously Tesla shareholders would need to vote, but if it does go ahead, it would be great if Tesla investors could actually get some exposure into xAI because of this. As we already knew from the delivery numbers, Tesla had their best quarter ever for the energy business. They set a record in Q2 of 9.4 gigawatt hours of deployments, and they hit record quarterly revenues. And this was due to successes both in the Megapacks and the Powerwalls. We have been speaking a lot recently on the Inner Circle show about all the new Megapack contracts that Tesla are getting globally. New Zealand, Australia, France, the UK, they seem to be popping up everywhere, and I really don't think that this momentum is going to slow down anytime soon. So I very much expect this trend in terms of energy revenue and deployments to continue into the next earnings. On top of this, the California factory continues to ramp up, and the Shanghai Megafactory is still on track to start production at the start of 2025. And this will help Tesla Energy actually keep up with the demand that they are seeing. And there really has been a high demand, especially for Tesla Megapacks. And Elon actually said that the energy business is production constrained, not demand constrained. It's very, very fair to say that people want Megapacks. Also, as kind of expected, services and other did very, very well as well, growing 21% year over year. They are still very much expanding their supercharging network despite rumors and concerns about this, and they are very much planning again to onboard more OEMs by the end of the year. Their supercharging network really is a competitive advantage that they have. It truly is a moat, and it will add very decent revenue and profit to Tesla in the upcoming years. The automotive sector will always be somewhat cyclical. This is expected, this is normal, and it is very, very impacted by macro factors. But it was reiterated that in 2024, the growth rates of energy storage deployments and the revenue in their energy generation and storage business should outpace the automotive business. And we are already really seeing this start to happen. We've been speaking about it a long time on this channel. Obviously, Elon's speaking about it, many people are, but the revenue from services and energy is now making up 22% of the total revenue. This time last year, those two were making up 14%. So you can see how this is really shifting over time. I think they've been much more than a car company for a very, very long time. They are working on real world AI. And even if you exclude Optimus and Robotaxi, their vehicles alone are robots on wheels. And vehicles are becoming more and more differentiated these days on their software rather than the hardware, which of course was the case in the past. Tesla are obviously very, very good at hardware, but where they really stand out is when they start to combine software with artificial intelligence. And the legacy automotive companies and even the startup companies just simply cannot compete with Tesla in this area. They can't. Tesla are too far ahead in terms of, like I said, their advancements in software, the training of their AI models, the data that they've already collected, and all of these things. Now, in terms of FSD and Robotaxi, which obviously a lot of people wanted to have some more clarity, some more information going into these earnings. Tesla are in talks with other automotive companies to actually license their FSD technology, but it hasn't been confirmed who these other companies are at this current stage. But it's important to remember that this doesn't happen overnight. Even if a deal was announced now, it takes a while to actually show itself because the other company need to get their hardware ready for the FSD software. They need to have vehicles with the cameras in the right place, all of this stuff. And it definitely won't show up in revenue straight away either. But it will definitely happen in my opinion because like I said, Tesla are just too far ahead and it will be too difficult for others to solve FSD on their own, and they will have to be able to offer FSD eventually because it will be a very, very obvious thing that we are moving towards. Elon is thinking that unsupervised FSD will potentially happen by the end of this year, and if not, no later than next year. He was, of course, a little bit skeptical to give any timelines, any deadlines, because in the past he has been very optimistic, and then people have absolutely attacked him for being wrong about this. But when this does happen, it will be at this point that the Robotaxi fleet can actually start to take place, and Robotaxi drives can happen. And actually, they're expecting to have FSD approval for launching in Europe, China, and other countries by the end of the year as well. We did get the confirmation that Bloomberg were absolutely correct, and the Robotaxi event has been pushed out to the 10th of October, which of course is 10th of the 10th, 10 out of 10. I wonder if that was picked on purpose, 10 out of 10 event, I don't know. But the reasons for the delays was as follows. Moving back a few months allowed us to improve the Robotaxi and add a few other things for the product unveil. Very, very interesting there. A few other things. What could this be? Elon also confirmed that they are on track to deliver a more affordable vehicle by the first half of next year. I've spoken about this before on this channel, but this is very, very big. The Roadster is also on track as well. He said that most of the engineering on that vehicle has now been completed and production is expected to start next year, and it really will be something special. Again, who knows, maybe we'll even have a flying vehicle. Optimus is performing its first tasks handling batteries in one of their facilities, and Tesla will produce Optimus for internal Tesla use in 2025 and for external companies in 2026. This is expected Optimus will move through a phased approach whereby internal use will come first. This will be great for Tesla shareholders. It will reduce cost of goods sold. It will improve efficiencies. We will see this on the top and bottom line as Tesla shareholders. It will be great. It will then be moved into other companies' factories where it will do useful work. Again, this will be a new revenue source, and eventually it will be phased out into the homes. This is a massive, massive market, as I've discussed many times before, and I really do believe that this will take Tesla's market cap to whole new levels that have never been seen before. GigaMexico is unfortunately on pause right now until after the election because there could be some heavy tariffs imposed on vehicles produced in Mexico if Trump wins. But they have been increasing their capacity at existing factories anyway. The stock movements was a little bit wild. It was an absolute roller coaster both before and during the earnings. And right now at time of filming this video, Tesla stock is down by 8.4% pre-market. Elon said that if you don't believe in Tesla's autonomy, then you should just sell your Tesla shares because everything else is just noise. I'm still bullish for the growth in the future. To me, this is just short term, and they are doing very, very well, in my opinion, at shifting their business. So I really think it will depend on whether or not people are seeing Tesla as a long-term hold and really believe that Tesla is an AI company. People who are not thinking this way will most likely just sell their shares because they are seeing lower numbers in the automotive segment. It's also important to point out that a lot of analysts will be thinking about the here and now, and maybe this will lead to a lot of downgrades that we will be seeing coming out in the next few days, next few weeks, because analysts are looking at the numbers that are on paper right now, rather than thinking about what could happen in the future, what is likely to happen in the future. So I will definitely be trying to buy this dip. Let me know what you plan to do in the comments below, and if you have anything else to add about this earnings, let me know what your general thoughts are as well. Thank you so much for watching this video, and I'll see you in tomorrow's episode.